that came in, though there was a slight pressure on gross profit margins this year. We have Chala Srisant, who's the managing director of the company, joining in. Thanks a lot, Chala, for joining in. Always a pleasure speaking with you. Regulation questions first up. What were the volumes in this quarter? How much of that was contributed by the small packs? And what's your outlook for this year basis what happened in the first quarter?
So India was more or less the same volumes that we've done last year because the capacities have not changed. So that's why India has been more or less flat. There was an impact of interest and depreciation that has come in, which is why there was a slight reduction in the PAT numbers and the PBT numbers as well. As far as Vietnam is concerned, we are completely on track. So there was a 50% increase in volumes compared to last year with the new capacity. So the utilization is quite good. And overall consolidated, I think we're given a guidance of about 20%. So we are, as of now, on track for that. So basically, it was a regular quarter, no surprises, nothing.
All right. Hi, Chala. Good to have you on the show. So you've explained to us the broad details and volume growth of 20%. You're holding on to that. Gross margins, they have come in under some pressure, come in below that 40% odd mark. How do you see that pan out going ahead? And if you could give us a sense, in quarter one, what was the EBITDA per kg?
So actually, our EBITDA per kg as such has not changed. It's in the range of about 100 rupees or so. It is on a percentage basis. Again, it appears to have changed only because of the increase in raw material prices, which there is a direct pass-through. So again, it appears as if on a percentage basis there is a reduction, but on a per kg basis, there is no reduction. And now the prices have actually started softening as well. So the green coffee prices, which were at about 2,800, 2,900 levels, have started coming down, have started correcting as well. So going forward, this it'll again appear as if we are recovering on the percentage basis.
And for the entire year, your EBITDA would be maintained around this 100, 110 rupees per kg itself, right?
Yes, that's correct.
And structurally, it'll go up by when? FY23, FY24, FY25, because you have additional capacity coming in and most of that coming in freeze-dried, which is a higher margin business for you.
Actually, we've come in with additional capacity on spray-dried now. Freeze-dried will come in next financial year. So
yes.
After next financial year, that's when we are expecting improvement to take place. As of now, we are making up for the spray-dried reduced margins with more premium products. The fact that we are able to maintain the existing volumes itself is a very good positive sign.
All right, Chala, premium as a percentage was how much of your total mix?
Percentage of?
Premium products.
Premium products will be in the range of about 15 to 20%.
And where do you see that number headed?
We could go up to maybe around 25 to 30% in the current year itself. And next year onwards, we are targeting to be a little bit more aggressive in that segment.
Okay, all right. Chala, you also mentioned that I think you are seeing some traction in terms of your market share. Could you give us an updated number out there? Has it increased? If yes, by how much? Just some updated numbers.
So market share in India also is constantly growing and across the world also. Normally, the industry is growing by around 2.5%. We are, I think, one of the very rare companies that's growing at the pace of almost 20% year on year. We've gained market share in several of our existing markets as well as we've entered into some new markets as well. So that's one of the reasons why we're quite confident that we'll be able to sustain this existing growth.
So if you could give us a sense of your market share. I mean, I just wanted to understand a couple of things with regards to market share in India. On an overall market basis, it's between 3 to 4 odd %, but you don't reach the overall market. So in the areas that you reach, which is your distribution areas, what is the market share there? And what's your plan to expand your distribution and thereby increase your market share?
Yeah, so that's a good question. On a pan-India basis, it's around 3% according to the Nielsen's data. But in the markets that we are present, we are closer to about 8% or 9%. And we are in the process of expanding our presence in other states as well. So when that happens, it'll be a slow and gradual process. but we're quite confident that we will be able to increase our volumes on a pan-India basis.
So, what is your target distribution reach by the end of this year? I think it was around 1.4 lakh direct reach. Where does it go?
Yeah, so it was around 1 lakh approximately, and now this year we're targeting about 1.4, 1.5 lakhs for the current year. We're targeting even just direct B2C sales, we're targeting around 220 crores in the current year.
All right. Thank you, Chala, for joining in, giving us all those details. B2C sales about 220 crores this year with an expanded reach in India by about 50% on track to meet 20% volume growth guidance as well, with an EBITDA per kg of anywhere between 100 to 110 this year. Importantly, making up for the low margin in spray dried by increasing their share of products coming in from premium sales itself. That's about CCL products. Take a short break, come back, get you more on the stock markets and individual stocks. Stay tuned.